3 News Now Web Extra.
The impacts are still yet to come. I mean, they're there already, but these are significant impacts. And if you tack on any restrictions, trade flows of oil, and for example wheat, then the impacts would be devastating. So at this point in time, we're talking about the impacts on what's already been, the sanctions already in place, and those are going to be very, very, very tough on the nation of Russia and the people of Russia. And it's you think about Stalin and Russia, back to the Germany's fight with Russia. You're talking similar things. I mean, the similar costs, and it's going to be affecting all of those who live in Russia, except of course Putin. Now he will be affected by if we see the continuing sanctions. I don't see how he can remain in office, and so he will be ousted henceforth after that. I think,
Even in a country like Russia.
I think yes. I mean, you think about it, and now I'm not a political scientist, but it's very difficult when your population's in penury and poor and going through significant changes, and we're not talking about a nation that's it's not a rich nation, but it's been a standard of living that's comparable to other nations in Europe. Well, they won't be comparable much longer. They will be weaker, much weaker in Russia than what you see in Poland, for example. And so you're taking two nations down right here, at least two, and that would be Russia and Ukraine, of course. And lots of big costs there. In other words, but on the flip side, the Russian economy is not the U.S. economy. It's not the Chinese economy. It's something like the economy of Texas or California, one of our large states. So it's not. But the population is not nearly as big as the U.S., but it's going to be significant.
Gotcha. Can you go at this point more deep into what that significance is? Are we talking like massive inflation or almost complete devaluation of the ruble, or like what are we talking about?
Well, first off, the ruble has taken a real hit, and that's the currency is already reflecting that. The interest rates have increased 20% on their central bank raising rates to 20%. Now that compares to the U.S. rate of 0 to 0.25%. So you're seeing already some big differences in expected inflation and also what's happening in terms of the overall economy. The economy will slow down, and you're talking about an economy that's heavily dependent on exports, and that's where it's going to be hit. In other words, you're not talking about an economy that's much like the U.S., where you have a lot of internal consumption, a lot of internal production, producing for the U.S. economy. They're producing. The Russians are producing for other economies, whether it's wheat sales to the U.S. or whether it's oil sales and to Europe, and natural gas sales to Europe as well. Those are the three primary sources, and those are going to be affected, all three of those as well. Again, that's oil, that's natural gas, and then there's wheat and other commodities as well. That's just the starting point. They will all be affected, and the real key going forward will be what happens with China. Does China jump on board with other nations in sanctioning Russia? And if they do, I don't see this invasion. I can't say the invasion will be over, but it may be short-lived. I mean, the message comes back from the streets of Moscow to the streets of Kiev. You're seeing, in other words, the parents that live in Moscow versus their offspring that are fighting the war in Ukraine. They'll get the message. And they're going to be thinking, well, what am I fighting for? And I'm fighting against people who, in many cases, speak the same language as I speak. So it's convincing the troops to continue the fight is not going to be easy. And again, I'm out of my area there. That's a political scientist or a military expert should comment on that. But it would seem to be difficult. Now, if you're talking about positive factors for Russia, has been that oil prices have been up to $110 a barrel. We're talking about growing from 60 to 70 to 70 plus to 110, 120 plus. That's very positive for the nation of Russia as long as they can sell it. Now there are some supply chain issues. In other words, how do you get it to the clients? How do you get it to the customers? Now natural gas prices have booming natural gas prices, so that's good for Russia as well as long as they can sell it, but there will be sanctions there as well, as this is a tightening of the screw, and you'll see some very significant impacts. Wheat sales, already you're going to see some impacts there, but it's not just the impacts of sanctions, it's the impacts of higher prices, but also shipping difficulties. And we're talking about, we were already seeing supply chain disruptions. This would just, in fact, increase those disruptions, whether it's trying to get them out of Russia into Europe or into the U.S. or into China. That becomes more difficult as shipping becomes more difficult, even without any shipping war or war on the high seas.
Okay, and what? Obviously, those sanctions for now have been in place, but based on what's in place, what should we might expect here locally in the coming weeks and months?
Well, locally, what we've already seen and what we're going to continue to see is for farmers, for example, agriculture, a significant boost in the cost of production. That's natural gas prices. Natural gas goes into fertilizer. Fertilizer prices have increased, have tripled in price. So that's putting a squeeze on the farmer, particularly in soybean and wheat. Less so in terms of corn, but I'm sorry, in terms of price, I should say. On the cost side, that's a big factor in corn, the cost of production of corn. But in terms of on the revenue side, we've seen the boost, and we'll continue to see those prices increase to the price of wheat, the price of soybean, the price of corn. We're seeing prices that we haven't seen in many, many years, and those are probably going to continue. And so the farmer's sitting there, not sitting there, he or she's working, of course, and they're selling. They're seeing their revenue, the price of what they're selling going up and up and up, but then their costs are going up even more. So we're seeing that. Also, in terms of farmland prices, we've already seen those even before the invasion of Russia into the Ukraine. Farmland prices have been growing significantly. For example, in northern Iowa, gone up 30% over the last year. That's farmland prices. So you'll see those continue. So those costs are putting a pinch on farmers even as the price of what they're selling is growing. It's just that their costs are growing more quickly than the price of their output.
Okay. So that's right now the maybe oil and that industry is or farming is kind of where we might see should expect to see the biggest impacts here, or is it going to be more broad than that?
It'll be broader. I mean, you're talking about, again, the fertilizers is the easy one there, but other costs of inputs, whether it's insecticide, all those costs are going to be growing at a much faster pace simply because of supply disruptions. In our survey that we conduct here at Creighton University before the invasion, we saw the bank CEOs we surveyed said the biggest issue that they saw, the challenge to the rural communities, was supply chain disruptions and how they were pushing up input prices. So those input prices much higher. And we're talking about, in this case, supply chain disruptions in terms of transportation. That would be trucking into the farm and out of the farm. We're talking about, on the plus side, ethanol. We're seeing with these higher oil prices and higher gasoline prices, that's helping ethanol. But on the flip side, ethanol's got to pay a higher price for their corn. Nebraska's number 2 in the nation in terms of ethanol production. So that's good for the ethanol producers overall. But again, we have to wait and see how this comes, how it unwinds. It's yet to be seen what's going on. In the financials, we're already seeing, again, the financials, interest rates in Russia's boosted the interest rates to try to stop the free fall in the ruble. The ruble is just, it's pennies on the dollar now, and that's very hurtful. Now it's good for it's very supportive of wheat prices for them, I mean, but it's not good for the overall Russian economy right now. They, with our currencies growing in value versus the dollar, U.S. dollar, versus the ruble, I should say.
And should we expect the ruble to keep falling?
Well, we're probably going to see it come off the bottom simply because they've raised interest rates. Now that should be somewhat supportive of the ruble, but getting back to its former position, not anytime soon. It's going to depend on ending this war quickly and getting some negotiated settlement. I mean, if I were, and luckily I'm not the president, Putin, he needs to be negotiating quickly. The costs are mounting, the pressures are mounting, and you could have the ability of the Russians to continue this war in Ukraine is not like it was in Afghanistan. This one is much more costly, and the ability of the Russians to continue, not that great. You've got troops, many troops on the ground, that they just can't pay for it. They've got to pay these men and women. They've got to provide them with food. All those, the supplies alone are costly to a nation that's going to be going through a deep recession and depression even. And so if I were advising Mr. Putin, I'd say end this quickly, negotiate quickly, and get the heck out of there if possible. This is something he didn't see coming. If he saw this coming, he wouldn't have done it. But some say he's not exactly all there. I don't know.
Right.
Yeah.
He mysteriously poisoned.
Exactly. What is that? Winston Churchill, his woman was at a tea party. I'm sure you heard this story. He said, "Mr. Churchill, if I were your wife, I'd be putting arsenic in that tea." And he said, "If I were your husband, I'd drink it." That's the best line ever. Nobody's ever going to top that one.
Okay, I mean 20%. That's a pretty significant interest rate. Right?
Oh, yeah, they could go higher. I mean, our interest rates during our inflationary period were up to 16 and 17%. So comparable inflation interest rates. So it's the problem, of course, is even with those rates, you're not going to be able to stop the inflation, but it will be supportive of the ruble, but with the low ruble value, that does make their wheat sales more attractive. But that's more attractive if you can ship it out. And it's more attractive if you can find a buyer. I mean, there may be more sanctions. No one expected the onslaught of everybody. And high school students are out there. I support Ukraine. Well, if high school students are doing it across the globe, you might be in deep trouble. Now, what would be his retaliation? Well, there's outside my area. Well, this is all outside my area. Much of this is outside my area to predict, but nuclear weapons, whatever, But he has raised that issue. So, again, Nebraska being an agricultural state, or where agriculture is very important, this is much bigger issue for example, for Nebraska than it is for the state I grew up in, Georgia, where agriculture is not as big of a part of the Georgia economy. So it's going to have big impacts here, and some of those will be positive, some will be negative, but overall, I would say it'll be negative going forward. Our Federal Reserve was potentially going to raise rates by 0.5% on March the 16th. That's off the table because of this. It's now they're going to raise rates, but only by 0.25% on March the 16th. So that's the good news, if we can call that good news. But farmers, farmers ordinarily would be seeing an increase in their interest rates to pay on operating loans. It's not going to rise as fast as we would have seen absent what's going on in Russia or going on in Ukraine from the Russians.
And what does that mean for inflation here?
Inflation's higher. I mean, this is we're talking about year over year, 7.5% on the CPI, Consumer Price Index, the highest we've seen in 40 years. This is going to push it even higher. So the Federal Reserve is caught between a rock and a hard place. They want to raise rates to slow down inflation, but when they raise rates, it slows down the economy. Our economy is already going to be slowing down. Why is it going to be slowing down? Because of the global economy. This is affecting global trade. We're seeing now the Biden administration is reviving some of the rough talk with China, and that's pretty scary to think about sanctions on Chinese products. There you have some big impacts for Nebraska, and we'll see what happens in China versus Russia, and does the Premier Xi Jinping, do he and Putin, do they begin collaborating? My best guess as a non-political scientist is no. Xi Jinping doesn't want to be in that, and nor does anyone else. I mean, Putin he's walking the plank out there, so to speak. He doesn't have not many people on board with him. When you look at the United Nations, when you look at it, it's just, and luckily it's putting a squeeze on him. How he reacts to the squeeze, I don't know. But right now, the Russian consumer, the Russian business person, it does not look good. If I were there, I'd be rolling up the sidewalk and looking for a place to run to. I wouldn't be exporting my product. I'd be exporting myself. I'd be headed for Poland or Hungary or Europe or other parts of Europe, Germany or wherever. But those that stay, it's going to be tough with higher inflation. They're going to be Russia is going to be experiencing what we did, or much worse than what we did in the late 70s and early 80s. We call it stagflation, where inflation prices are expanding at a very rapid pace. At the same time, your economy is slowing down. And that's because, how do people get to work? Can people work very effectively in Russia? And the shortage of food that's we're likely to see in Russia. They're exporting wheat, but what about who's producing the bread? What will happen there? It's not a very inviting place. If you're placing investors placing bets, it would not be Russia right now, and they've expressed that by the ruble coming down as it has. And as I said, to stop it or slow it down, they've increased interest rates. Their central bank to 20%. It's probably even higher now in that. And that's just the central bank rate. Other rates are even higher. So you're going to see a lot of buying of cryptocurrency probably, in other words, and grabbing the dollar and resisting rubles. Who wants to hold a ruble when it's going to bounce up a bit, but it's still down to pennies on the dollar. Effectively pennies on the dollar.
So is the biggest impact, or what has caused the biggest impact to that right now? Is it the central bank sanctions, or is it or something else, some other part of the sanction package, I guess?
The sanction package is what's called the SWIFT actions there in the banking sector. That's where the biggie is, and that's where, even if they sell the wheat, how do you get the revenues back to Mother Russia? Not easy. In other words, putting those sanctions on really hurt. So the credit, extending credit, getting credit, the credit markets are freezing up for Russia. Our business businessmen and women in Russia, freezing up because the ability to borrow and getting money flows from New York investors into Moscow. It's much more difficult now with these sanctions, the SWIFT sanctions, and those. And again, it's for Nebraska, it's pushing up both, as I said, the revenues, but also the costs. So, but for Russia, it's mostly there's the good part is the prices are growing. The bad part is for the wrong reasons. I mean, they're growing wheat, oil, natural gas. Those are the three biggies. And the prices are growing, escalating at a very fast pace, and will continue to do that, pushing up inflationary pressures. But the fact is that they're getting better prices. But how do you get it there? The supply chain bottlenecks that we're facing here, they'll have them there. They have them there.
So kind of just broadly, it's instability. There was the supply chain crisis already, and then this is another thing that nobody's quite sure exactly what direction it's going to go from here. Right?
Well, if I were a betting person, we all sort of are betting persons. What is instability today will be chaos tomorrow. We're talking about economic chaos, much like what we've seen in other nations like Venezuela, but even more than that. So to be a Russian citizen right now is to be scared. To be a Russian business person, to be scared. It's just when your confidence goes down to the bottom, and it is the bottom. How do you invest? You plant equipment? No, you're not going to be investing in plant equipment. You don't want to, so you pull back. When you pull back, then you're not requiring more workers, so the unemployment rate goes up. All these things spills back to the Russian population, and it's not a pretty picture. But as I said, what's not pretty today becomes downright ugly tomorrow. I mean, it's just bewildering to me that a leader of this country could take steps that are almost self-evident now. The end point, if he's not negotiating a settlement, the cost to his citizens are grave, and the cost to others. I mean, it's not just his citizens. I mean, you're talking about Germany that needs that natural gas. You're talking about much higher natural gas prices for Germany and other nations there. Natural gas prices to us. So there's some suffering going on with us too, but not like we're seeing in Russia. Well, it's just I'm surprised that we're not seeing more movement in cryptocurrencies. Bitcoin has been going up, but not like I would have expected. In other words, when you have no faith in the currencies, the ruble, and in some cases the dollar, the yuan, the major currencies, the Canadian dollar, all those currencies, euro, you lose faith in them and you're scared. You resort to something that you can't necessarily put your hands on it, but it's not based on the good faith and credit of that nation. So I'm surprised the cryptocurrencies have not taken off. Some of them have done well, but you would expect the pure abandonment of the ruble and grabbing onto a dollar, U.S. dollar, which we've seen some of, but grabbing exchanging whatever rubles you have for a cryptocurrency like a Bitcoin or other currencies. So I'm surprised we haven't seen more of that. We probably will, if this war continues, we probably will see the cryptocurrencies increasing in price. And we haven't seen as much of it as I thought. We saw gold prices going up some, but not as much as I would have thought. So we've seen, we got more to come on this if the Russians and the Ukrainians don't negotiate a settlement. I think there's strong incentives for both of them, both parties, to negotiate a settlement here. But Mr. Putin's not been known for his good decision making, I'd say. But he went into Crimea, and of course he won there. I mean, President Obama did not invoke the sanctions that we're seeing now, and so he withstood those limited sanctions. These are not limited. These are big. These are much greater, and not only much greater from the U.S. globally. I mean, everybody from Mexico to even China's hinting about they've not engaged in the sanctions yet, but even China, I mean, they asked, it looks like to me, China asked Putin to put off this invasion till after the Olympics, because it is odd, and it's pretty well timed that the Olympics were over, invades the Ukraine. And also, in this case, if what we have to be concerned about, especially, is what if China chooses to use this time to do flyovers of Taiwan? What if China starts doing reconnaissance flights around Taiwan? What if China begins intercepting shipping around Taiwan? I mean, that's big time. And that's really big time for big impacts for Nebraska, because we sell a lot of soybean there. We sell a lot of pork there, and that would be big impacts there. And last time we had the federal government at least could protect the farmer to some degree. We don't have a sugar daddy there now to much. The sugar daddies run out of money, so to speak, you know.